This is a very exciting time to be in the real estate market. We now feel it's truly through this period of stagnation and lack of transactional activity. Clients often say we're a good bellwether for what is going on in the market, and I think it's true that we're often appointed to help businesses that are looking to create transformational growth through attracting leaders or diversifying into new sectors or service lines. In broad overview, we're seeing a return of capital and an increased confidence of investors to look further up the risk curve in terms of both products and geography. Going back to the bellwether metaphor, this has led us to helping businesses find them the expertise to enable to carry out their new strategies. Examples of this are with real estate private equity firms who are looking at riskier markets such as Spain, or starting to do their own development so that they can make the opportunistic returns that their investors demand. We've recruited in development expertise or specific geographic real estate knowledge to enable this. It's probably no great surprise to you that over the last year, many have asked us to help them find people within London prime residential and central London office transactions. There's been a lot of activity in the real estate advisory sector, with businesses jostling for position to ensure they're best placed to take advantage of potential increased activity from the principal side. We've seen interesting new trends in growth in alternative sectors, in particular student accommodation and healthcare. Healthcare is a hugely complex market with many different organisations servicing it. Whilst there's always been a need for valuation advice in the sector, it's fairly embryonic in terms of it being looked at by institutional investors as a core real estate investment product. Sources of capital is still a major concern for all areas of the real estate market, both on the private and the public sector. Public sector bodies such as social housing firms, who have previously relied on government subsidy and bank debt, are now having to be much more sophisticated and creative about how they raise capital. And this has led to a demand for banking or real estate finance advice to be in-house. An example of where we've got involved in this is we've helped a new business that is set up specifically to offer advice to public sector bodies on how to raise capital through debt capital markets. Now, on the much talked about subject of the UK housing shortage, I don't think anyone has a perfect answer for it, but we have seen some interesting trends on different approaches and investors seeking to take advantage of the shortfall. Now, there's a lot of interest from institutional investors to recreate the private rented sector model that has been so successful in the US. However, the major stumbling block seems to be that house builders don't want to get involved because their business model is to get the returns as soon as possible from the end sales. So there's therefore a gap in the supply and demand, which creates opportunity. One solution is to buy a house building business, which we've seen evidence of this from some of the leading private equity houses. But another way we can help is to bring in individuals to create development arms for these businesses. Overall, sentiment seems to continue to grow as we progress through 2014. It's a hugely exciting time to be in the real estate sector, and we're looking forward to witnessing the evolution of the sector through this next cycle.